Welcome back. This is Facts Over Feelings, and we're talking about having a real conversation, an honest conversation, because there's been a massive shift towards 1099 income over the last decade. More contractors, more freelancers, more independent workers, and on the surface, it sounds great. More flexibility, more control, more income potential. But what I continually see over and over again is people stepping into the 1099 income space without understanding what they actually signed up for. Because when you go from a W-2 to a 1099, you did not just change how you get paid. You change your entire financial structure. You're no longer an employee. You are a business. So today I'm going to walk you through the reality of that. Not just a social media perspective, the real version on the 1099 reality check. What they don't tell you. Without further ado, let's get it. We all believe the grass is greener on the other side. We say, you know what? I just got to get out of this captive W-2 space. If I had the ability to go out and make my own money, not only can I make more money and control my time and be better at what I do, I could finally get the value I truly deserve. Now, what value that creates and what value that ultimately means is up to you. But you create how hard you work. You can create how much money you bring in. It's all on you. But these are some things that they don't necessarily tell you about. One, taxes are now your responsibility. This is the biggest one. I was just on a phone call this week. They were like, hey, yeah, I started getting paid. They started giving me checks. Next thing you know, I got hit with a tax bill. When you are a W-2, taxes are withheld in the background. Your payroll, your federal gets taken out of your check. You never really see it. It just happens. With 1099, most of the time, nothing is withheld. You receive your full gross income. And that creates a false sense of reality. You feel like you're making more money, but you're just holding on to the IRS's portion temporarily. Now you are responsible for your quarterly estimated payments. I'm going to say it again. Your quarterly estimated payments, April, June, September, January. Miss those and you are going to deal with penalties and interest. And here's where people get really caught up. They wait until tax season. They file their tax return. And now they owe $15,000, $20,000, $30,000 with penalties and interest and fees and all this other stuff. And you're like, why do I owe all this stuff? This is crazy. You should not be shocked. The liability was building the entire year. You need a system. You need a team that can help you with this. Every dollar that comes in, a portion goes out. 25 to 35% set aside, depending on your situation. And you need to understand the quote unquote safe harbor. Pay in enough throughout the year to avoid penalties. Ignore it, and the IRS will make you pay for it in the end. Next, self-employment tax is real, my friends. This is the one nobody talks about up front. When you're W-2, you split payroll taxes with your employer. When you're 1099, you pay both sides. That 15.3% right off the top for Social Security and Medicare, that is you as the business owner. So now, not only are you paying income tax, you're also covering the employer portion. That alone can wipe out extra income you thought you were making. Now there are strategies around this: S corp elections, reasonable salary, distributions, et cetera, et cetera, et cetera. We're going to get into that today, but that requires planning. If you are just collecting income with no structure, you may be overpaying. So we talked about taxes. which is one of the biggest issues in regards to people going to 1099. Let's talk about your income not actually being your income. This is a mindset problem. You get paid $8,000, you think you made $8,000? No. You collected revenue. From that revenue, you have obligations, taxes, business expenses, savings. Then whatever's left is yours. If you skip that process, you are operating in the blind. I'll tell people this all the time. Stop looking at your bank account as your income. Look at it as a clearing account. Money comes in and it needs to be allocated. If you treat gross as net, you will always feel behind. So now that you're running a business, this is where most people fail. They want the upside of business ownership, but they don't want all the responsibility. You need a structure, separate bank accounts, bookkeeping systems, expense tracking, documentation. Because if the IRS ever asks you questions, you need to be able to answer those and not guess. You need to know what you made, what you spent, why you spent it, and what qualifies as a deduction. Not everything is a write-off. I know a lot of people try, but not everything is a write-off. Social media has convinced people that everything is deductible. It is not. There has to be a business purpose. If you cannot explain it clearly, it probably does not belong. And if you're sloppy here, you are setting yourself up for problems much, much later. So, you must manage your cash flows. W-2 income is consistent. 1099, absolutely inconsistent. Some months feel incredible, others will feel slow. That is the reality of being a 1099 operator. So now you need cash reserves, a plan for uneven income, spending discipline. If you build your lifestyle around your highest earning month, you are going to struggle. You need to smooth out that income. Pay yourself consistently, even if your revenue is not. That is how businesses survive. You're lost your safety net. You've lost your safety net. Let's talk about what you gave up. In regards to the 1099 and then the W-2, but in regards to W-2, you lost your health insurance, employee retirement contributions, disability coverages, paid time off. That is all gone. Now you're responsible for replacing it. And if you ignore it, you're heavily exposed. But there is a huge opportunity here. Because I know, I've done it. You now have access to solo Ks, SIP IRAs, HSAs, health savings accounts. You can actually build a better system. But only if you're intentional. Most people are not. They focus on income and ignore the protection. So, why are so many companies pushing 1099 incomes right now? Let's not ignore this. Companies benefit from you going 1099. They reduce their payroll taxes, their benefits over long term. There's no long-term liabilities with you. They shift the risk to you. Now, does that make it bad? It just makes it that where you have to understand how the trade works. You're taking on responsibility in exchange for flexibility. If you do not manage that properly, you can ultimately lose. I say this all the time. The 1099 game is real, and you need to have a firm understanding on how it works. Here are some other things to consider. The audit reality. When you're 1099, you increase your visibility. More deductions, more complexity, more opportunity for error. That does not mean you will be audited, but it does mean you need to operate a clean business. Keep records, keep receipts, keep logic behind your decisions. Because if you ever had to defend a return, like a tax return, You need to be able to do it confidently. So the upside, if done correctly, is huge. It's huge. 1099 gives you the ability to have flexibility, to run your business, to make more money, to just be your own person. Let's be clear. 1099 is not a bad thing. In fact, it can be one of the best things if set up correctly. You have control over your income, your deductions, your retirement planning strategy, your tax planning strategy. You can build real wealth this way, but only if you respect the structure, only if you respect the time, only if you put the time and the energy in to build it successfully, only if you put the time and the energy in to build the team around you that can help you build this successfully. This is not something you have to figure out later. You need a plan from day one, and you need to surround yourself with people that have done this previously so you don't step on the same landmines they do. Someone said this a couple of days ago. They were like, hey, I believe in all this stuff. I believe in the people who've done it before. I like to learn from them because they've taken out all the bugs that I don't have to, taken out all the landmines that I don't have to step on. I said, true. I said, but I also think no matter how many landmines they have stepped on, those were their landmines to step upon. Because you will inevitably step on your own landmines. Just because they have stepped on landmines in the past doesn't mean you don't have your version of those same landmines that you're going to step on. Things change. Environments change. So in closing, guys, here's the reality. Most people are not struggling because they are 1099. They're struggling because they are unprepared. They stepped into something they did not fully understand. If you're 1099, act like a business owner. Have structure, have discipline, have a plan. Because if you do, this can work in your favor. If you don't, it will catch up to you. Thank you guys for listening to this Facts Over Feelings segment. We're talking about 1099 earners. We're talking about all the different things from taxation to flexibility to lifestyle that these people undertake. And I hope this has been a valuable use of your time. Stay home, stay safe, my friends.